So Matt, yesterday we kind of went over, and this will give us an opportunity to also verify like the reason why we trade certain coins and we don't trade others, right? There's a lot of things that we don't like go over, but this is giving us a good opportunity to kind of like see. So like I don't trade Litecoin because Litecoin doesn't really move properly. So that's why trading like Ethereum, Solana,
Yeah, I don't
Dogecoin,
trade it.
yeah.
I don't
But
trade it. I just to be on it.
Yeah, but I liked it because um, watching a coin that doesn't really um, do much and then setting principles or a strategy based on that particular coin, right, might allow us
Mhm.
to kind of like see something that we normally like get some different data, right? So I remember yesterday we were talking about very simple, like the long is going to happen when we have a 1 hour retesting of the positive value, right?
Right. Yes.
So what I did was, and I'm going to record this here. And if you want to see it, you can guys can catch it on the YouTube side. If you want to pull up YouTube, it should be streaming on YouTube. When I stream and share my screen on Discord, it's too much data for Discord, and it shuts kind of lags me. But if you look, which is probably better, take a look at your 1 hour chart on Litecoin and pull up just the moon indicators, and we can see where there was a time where we were waiting for it to actually like break positive value, and then
Yeah.
the retest and its bounce up from there would have been our long. Now, if you take a look, it started to head up around yesterday around 2200, so 10 o'clock, 10 p.m., right? And we could see where it's starting to finally move up after it made that second move down. You see that your time would probably be midnight. Remember, when I say my time, it's always 2 hours behind Central.
Oh, okay.
But you see on your moon indicator, go to Litecoin, go to the 1 hour. Do you guys see that? You
Yeah.
see how the orange line went to make a 1 hour moon and then it rejected and went down? You see that, Anthony? You guys see that?
No, what are you on? Litecoin?
Yeah, I'm on Litecoin. So go to Litecoin, pull up the 1 hour, and September 8th, yesterday at about midnight for you guys, I got 2000. What was 2000? 8 o'clock for me, so 10 o'clock for you. So 2200.
Yeah, that's where it started going back up. Yeah.
Yeah, you see how it went up, but then notice that before it got to the blue line, it head back down. You see the orange line push up. It doesn't make a moon. It heads back down.
Oh yeah, yeah.
Yeah. So what that basically, so right there is where, it kind of looked like we were getting to the point, and I'll post this in the inside the Discord real quick so we'll see that on there. So this is what I'm talking about. Right there where you see the arrows, you see that it decides that as it's moving up, it doesn't make a 1 hour moon. It decides to fall back, right? And then that
Yeah.
fallback is basically where it creates the move to the upside. So that is kind of like the retest that we're looking for, the momentum, right? Now,
Right.
the that is kind of like what we call a prelude to the trade, like a trigger. What we could look at here is, and what I did here is I mapped out the blue line. So you see how the blue line, when the orange starts to head up, the blue line actually is heading down, and then when the orange starts up, that's at 2300. So that'd be about 1 a.m. your guys' time. It took
Right.
two 2 hours before the blue line actually bottomed, and 3 hours for it to start to head up. Right. So those are 2 points that we can look at and say that, okay, we're looking for a retest of our 1 hour, right? The blue line is confirmation of the movement, right? So I'm gonna go back here, and this will be on YouTube, and I'll put it up afterwards, and we're gonna go back and look. And this is where I'm saying is like using the volume. This is why the moon indicators are so huge, right? Because they're based off the percentile of money, right? And I remember having a little bit of a talk um, with I am. What's up? What's up, I am? And she was asking like, what's the difference between the moons and um, the RSIs? Well, the RSIs are simply the sentiment of a trade, and the moons are the money of the trade, right? So one is what people are doing, the other is the amount that they're doing it with, right? The more they have, the more amount they do, the more they give. So when we look at this trade, we can see that when the orange actually starts to head up is where we see that Litecoin is about 112.52. Now remember earlier we were marking an area of 112.29 as an entry, right?
Right.
Now after it went past that area, right? See how it dipped below that area? When it started
Mm-hmm.
to return back up, and that was on the, you see the 1 hour, we'll go back and get a different look, but when it dipped all the way down to our 111.65, right? And then
Right.
it started moving up. Now, when it got back to our 112.29 and it started to show that volume, that bounce, that would have been a reason to take that 112.29 entry again. See what I'm saying?
Yep.
Because we've been waiting for, we know, okay, so piecing together why we're doing a trade, right? The entire reason why when you found the first trade was an early 30-minute entry. And we knew that eventually with that 30-minute, we had to wait for a 1 hour confirmation. So by having the 1 hour rule, which means don't make a trade unless the 1 hour volume breaks positive, retest, and that's your entry, right?
Right.
That is a rule that you can have to basically keep you out of. So first of all, what it does is it's a rule that protects you from getting into trades that you might not be ready to handle, and also get you into trades that have higher possibilities of hitting 100x's so that you can make an easy 30 to 50. When they
Right.
don't execute, it doesn't mean that the trade wasn't there for a winning trade. It just means that at the skill level that people currently at, they weren't prepared, right? So this is why, when you pulled up, you went back and looked at the Academy trade, you see the 45-minute trade videos. We have a 45-minute trade video that hits and it produces. It hit 2 winning trades here. But based
Mm-hmm.
on our 1 hour rule for, let's say, the Making Trading Easy course, which is what we're doing now, which is based for people who have never traded, just learning to trade, getting the concept of understanding why volume is king and how we trade and why we put in more, because the concept is this, and like I said yesterday, it's not about making 4, 5, 6 trades a day. It's about making 3 to 4 trades a week, but make $500 to $700, right?
Right.
The goal is to make $2,000 a week, not to make 2,000 trades.
Right.
So that's where you have to, like, the mentality. That's what boot camp's all about, right? Boot camp's about changing how you see something so that you can understand how to accomplish your goals, right? So in this scenario here, we were able to um, put a rule in. What's up, Innovative Concepts? We were able to put a rule in. Don't forget, the guys, if you're on TikTok, share the live, guys. Share the live, and don't forget to hit the like button. But we put a rule in here to kind of just allow us to find what we like to call master trades, right? Making trading easy is all about finding a master trade system that everyone can do if they've never traded in their life, right? Finding a 1, 2, 3 step system that allows them to eliminate, anxiety, crazy, wicks. It's just to get the heart, it's just to get the best part of a trade and then just walk away from it, right? Not going through all the, the pumps, the dumps and all, there's multiple trades in every single trade, but getting to the master trade is where you really just kind of, you put the most amount, you do 500 to $1,000. You're searching for 30 to 50%, and you do it, and it's a safer trade, and that guarantees that we're going to, if we have 10 trades, 7 out of 10 winners. The winners will be 30 to 50% plus, and the losers will be 30 to 20% losses, right? So the end of it, we 4x our bag. So if we have $1,000 bag, we do that 10 trades, in 2 weeks, we made 4,000, 2,000 a week, right? 8,000 a month, right? So that makes
Right.
sense.
Yep.
So by having that rule, we can, sit here and evaluate a trade to see how it works. But then it allows us to also see where we can find what we call cheat codes to take advantage of moves inside of the trade that normally we wouldn't understand. Okay, and that's why I'm mentioning the moon indicator is the indicator that we use the most. The RSI is simply an indicator that people have to understand that you're trading with momentum, right? So if you're a new trader, and if you just learned a little bit of the RSI philosophy, if you're trading with the masses and you're using, that's why when I teach people about the RSI live on TikTok, it's not in a course, it's not in a, it's because these people are hodlers. So if you're a hodler, you should buy at the bottom of the 4 hour and the daily, and then you should sell at the top of the 4 hours and the top of the dailies. And
Right.
that's where you hodl, because those are the biggest possible moves that you can get holding your particular coin. Now, if you're someone using leverage, then we go into the smaller time frames, the 4, the 2, the 1, and the 45, so that we can make 10 trades for every one hodl trade, so that we're able to 10x, right? So a hodler could actually 4,000% their holdings in a year, where we could 10x that, right? So it's a very, very simple process of getting in there, right? So here we can see on the Litecoin move, if you look at the orange line, when we called this out, when you called this out, we were way back on this other side, and you'll see this in the video. And what we were waiting for was the 1 hour to push up in volume, pull back and
And
retest,
come.
and then enter. Now, we didn't get the positive volume, pull back, retest, and run. So the safety was on, and we wouldn't have made that trade. But we can see that when we got the 1 hour to come up to make a moon, it rejected, and when it came down and started back up, had we made that decision there, okay, and I'm going to put an orange box here to kind of like put that section. Had we made that decision there, we had an opportunity for a solid trade. Now, a second box that I'm putting in is going to be a blue box, and that blue box is going to represent when the blue line headed up, meaning
Right.
the juiciest part of that push. Does that make sense?
Yep.
Okay, so now we're going to go back. Now that I have those sections kind of like branded out there, I'm simply just going to click on the main chart so I can see those areas, and then I'm going to start to dissect it. So, and we can see here that on the overall thing, we had broken above the positive volume. The retest, you see how it comes down and retest? Right where it should have retested on the 0 line, we ended up with a what? A blue moon, right? You see that?
Yep.
So when that blue moon came, right? That right there was a simple indication of what? What do we say? If what's supposed to happen doesn't happen, then we know what will happen. So that's where we could have went into a short. Does that make sense?
Yes.
Okay. So having these very simple 3 steps. Yo, what's up, brother? Let me invite you in, big dog. Having these simple steps basically allow us to um, understand what's happening, you see, so that we don't have to trade emotionally, we can trade systematically, right? And when we have these 3 moments here, right, we have a safety of a 1 hour retest, and then we have the knowledge that a 1 hour retest is the trade, right? Now there's 2 levels to this trade. We call them an A trade and a B trade. Okay? The B trade is normally the smaller version of what we want to really happen. So an A trade would be the fact that the 1 hour volume breaks above positivity, comes back, and instead of making a blue moon, it breaks up and we enter there and we get the full momentum of the next push. Okay? That's an A
Right.
trade. That's the trade that we want to execute or at least be part of the meteor time every time. A B trade is the smaller version of what we're working for, which in this case, right, is just like the Elliott side. What do we have in the Elliott side? We have wave 1, pullback, wave 3. Wave 3 is always the most solid opportunity for a trade, and most of the time it's the biggest trade that happens. In this
Right.
scenario here, the B trade is actually wave 1. And in conditions, we always know that we're taking profits in that area because wave 2 is always the pullback, is always the short version, right? So
Yep.
the way to tell the difference here is that in wave 1, when we got wave 2, instead of getting wave 3, we got a blue moon and we went to a full pullback, which was the short. So we were able to short wave 2 into a extended, drop. So this little pattern here is something that we're going to, follow and make it a 45-minute trade for the Making Trading Easy process and work through tracking this, following it, calling it, and then by integrating the Fibonacci's, having ideals of possible greed entries and then the greediest entries. And then by understanding the difference of leverage and percentages, we can then calculate our risk to reward. Okay, which
Right.
we'll get more into, as we move forward in boot camp. But this right here, what I wanted to do was just to wrap up the basic understanding of what we needed to happen. So we needed the positive to break positive, retest, and run. That's what we were looking for. If it doesn't happen, then we short. Okay?
Right.
Now,
Yeah. If you look at the soul chart, it's got the perfect example of what you want.
oh yeah. Yeah. That's why I was happy with Litecoin because sometimes, if you're testing on a coin that moves a lot, you're getting very quick data. And then
Mm-hmm.
looking at Litecoin, which is a very slow mover, we're able to, really like process a systematic trade and then apply it to the other coins that we like to trade so that we can see that, what we're getting and how it works,
Right.
right? That's why we do the Making Trading Easy because the MTE is just simply 1, 2, 3. Something that everyone can
Right.
see, everyone can do, everyone can repeat, right? It's a very simple thing. Now, in between that, the levels of advancement come down to the people where they start to, integrate their own. It's how you see a trade, right? When you start to see little extras and stuff like that, then you can add that to your trades, to where it's like, oh, okay, you know what? Um, I can take this B version trade because I know that it's working into an A trade. But I also know that when I'm doing the B version, it's wave 1 and I have to execute the profits because wave
Right.
2 is always a pullback.
Yeah. If you scroll back, well, I guess another day or whatever,
Mm-hmm.
you can see the perfect example on Litecoin where it went up into the positive.
Mm-hmm.
Yeah, right there.
Yeah. So we know what we want, right? And that's the thing is like, and that's where, we don't want to, it's not about doing a lot of trades for 50 or 100. It's about doing, 5 trades for 1,000 or 500.
Right.
You know what I mean? Because you just want to, the
Yep.
goal is just to make the amount of money that we want to make. Because that's what
Yeah.
you're really like, that's where we're at. So you have to develop something that has, it takes less risk and it has a higher reward balance to it, right? And that's really what's key here. So as we go through this, we can see that there are B trades in here, and that's that B trade. So now that we kind of see that, I'm going to slide back to our 3 minute so that we can just kind of take a peek at these boxes, in the area that we normally talk about, which is where we trade based on 3 minute moons, 3 minute buys, and stuff like that, right? So we can see here where we had that original where the orange starts to head up, right?
Yep.
And we have our push happens. We get a wave 1. There's your pullback to wave 2. And then that's where you see the wave 3. See?
Right.
Now,
Yep.
very, very easy, very simple. Now, this blue box happens to be in a situation where after it kind of like ran over, and then when the blue line showed that it was going up, we had an opportunity to get into this section here and then move up to this level, which is the second opportunity of this trade, which takes us over to here, right? And then when we measure these out, you can see the difference in possibilities of what we could get, right? So this one had a possibility here of 1.5%, and then the blue one had a move here of 0.7. So we'll just say 0.5%, right?
Right.
So this is where the understanding is on the pullback where the orange starts up. The leverage would be around 50%. And on the other one, where we're using the momentum trade, which is the blue box, we would go for a higher leverage of around 70 to 80. Because we know it's going to be a shorter push, but it's also the momentum push.
Right.
So it either or, we're looking for that 50, 30 or 35, 30, 35 to 70%. These two trades came in and happened, and if you executed the first trade, took profits at 30, 50, or 60%, and then took that second trade for 30, you now have a 90% trade on $1,000. See what I'm saying?
Yeah, that'd be nice.
Yeah.
Yes, sir.
So that is the B trade version of what we're seeing here. Okay. So this is where executing the A and the B, or the B and the A, the B trade while waiting for an A trade that didn't manifest yet, allows us to go in there. And then when the A trade failed to manifest, right, and we see all these clusters, right, we're basically sitting here, and it's not like things happen immediately. This goes on a cluster ride for 5 o'clock in the morning to 9 o'clock. There's 4 hours here of data that's telling us one thing, right? If we're expecting the 1 hour to be a retest and a breakout and basically pull back, and then we're expecting this big move here, right, to finish up the day, and we don't see that situation actually happening, and then we can notice, and this is why sometimes in the videos I'll go back and go through all the chats, you guys see me where I'm putting and this is what the arrows mean, right? So when I put green arrows, right, that means that it's showing that it's moving towards a long position, right?
Right.
And then I'll show an area where it pops, and then When it decides that it's something different, I put a red arrow,
Right.
right? Meaning that we are changing direction. And that's because here we're pretty much testing a resistance line, right? So it's
Hmm.
not that we're negative yet, because remember, we're waiting for the 1 hour retest. That's what we're
Right.
expecting. So we're expecting it to do what it's supposed to do, which is basically go up and down, right? It's supposed to bounce to the bottom, to the top, to the bottom, to the top, right? We're expecting this because it's holding support. We expect the break of the support area. And then from the break of the support area, normally once it breaks a direction, it normally, at that point, it lets you know it's what decision it's making. So the next move here is critical because it either breaks out after it breaks that, or if it stops and doesn't have momentum, then it becomes what it's supposed to be, right? So if it doesn't do what we expect it to do, then we know what it will do. See what I'm saying?
Yep.
And then we end up in that big, beautiful short that goes ahead and pays us off at about a 2% move. And remember, we're doing shorts at 80%.
Right.
So this is 150% on $1,000.
Yep. And that's the thing I've noticed is I jump in too fast. I'm
Mm-hmm.
thinking I need to. I don't wait and watch, and like I've learned the last couple of days with you is wait for the retest, wait for it to come back to your entry point, take the time because you got plenty of time.
You got all.
You
It's
always think
always
you're
gonna. We're gonna. I mean, think about the last 2 weeks. We've been at 201 and 220 for 2 weeks.
right.
We've gone up and gone down 8 times in the last 2 weeks, from 199, 197 to 210, 230, 230, well 220, and then back down to 201. Then we went to 215, and then we went to 202. Then we went to 210, and then we went to 196. Then we went back to 215. You know what I mean? we
Yep.
have we have hit these levels multiple times in the last 2 weeks. So that's why the mentality of a trader is so important, because you have to remove the emotions of trading and become more systematic, right?
Right.
And when you're systematic, it is what it is. Okay? And it's okay to lose a trade, right? What you're trying to do is not lose the full amount, right? What your job to do is, if we're setting up trades, is when trades are moving in certain directions and you're realizing that you might have made a decision. And this is kind of where, even if it all stays, and what I mean by, let's say that you have a trade that pushes up to 30% and you don't take that percentage, and then you don't keep your stop loss at negative 30, right, or 25 or whatever you are. And then what you do is you move that stop loss up to the entry point. So if that trade does go the wrong way, you end up just going back to your entry, which is a 5% loss versus a 30, right?
Right.
Any way that you save on a loss is actually gains, right? So for an example, if we're trading 7 or 10 trades, and we're doing $1,000, and just this is with no extra wins, no nothing. This is just basics. And we say, okay, out of 7 of those wins, we're going to take in $300, right? That puts us at 2,100. Now we lose basically 3 of those trades. That means at the end of the 10 trades, we come back with 1,200, right? Now let's say,
Right.
worst case scenario, which is where you have to live. You have to understand that, until you master something, you're going to always have worst case, situations. That means that if you made 5 trades and you did 5 trades a week for 2 weeks, you made $1,200, right?
Right.
That and yeah, at that point, you take your 1,200, 56 weeks a year. That's $67,000 a year, right? What's that? 15, 1,200 bucks times how many weeks a year? 50, 56 weeks a year. $67,000, right? And that's where compounding and multiplying, right, is where you take this number, right? The problem is, and like I said, this is just like understanding that when you what's the old saying? Learn how to make a dollar, do it a million times.
Yep.
And once you understand how to do something at that level, right? So for instance, let's say you never moved your stop loss, you never adjusted the losses. You just basically 25% stop loss, 30% gains. You never took extra gains, right? Because you have a couple of these trades that'll do 50 to 60%. And theoretically, if you have two trades do 60%, that means that's another $600 in your pocket because you eliminate your two of your losses. You see what I'm saying?
Right.
So
Yep.
if you don't do any of that and you don't get any better and you just do the basic, all you had to do to make 67,000 become 135,000 is simply go from trading 1,000 to trading $2,000.
Right.
You see what I'm saying? This is
Yeah.
not
I mean,
that
it's like
hard.
Gus was telling us the other day when we was in the chat that you told him, if you want to make more money, just do the same trade, just add more money.
You have more money, right? Very simple, like understandings of like how to grow it. But that's where we have to understand it. And people are trying to make more money the wrong way.
Right.
And that's why it's unsuccessful,
Right.
right? So that's why when you start off, boot camps, I always tell people, take boot camps because boot camps where the mentality is really the key. It's how you understand, how you see these things, because that's where you'll change what you do, right? And knowing that we can easily make, if we did just the basics and we're the worst trader possible in the system, you can make 60 grand a year, but all you had to do is double your bag to 1,000 to 2,000, and now you're making 120, and you're the worst,
Right.
right? And if you do anything else, and you take 30 to 40 instead of 30%, you take 35 or an average of 50% on each trade. Well, now you're making 200,000 a year, right? So you always want to know what's the worst case, what's the worst I could do before you make a decision, before you do anything, because it really comes down to getting into something that is like able to be accomplished at the worst level and still get the goal of what we're trying to go. So this right here is just a simple example of having the 45-minute trade, right? So this is our 45-minute trade breakdown. And what I'm going to do here is I just wanted to, I was going to make a video on the 45-minute trade, making trading easy, 45-minute trade. But what I wanted to do is I wanted this to finish a live trade that we were all watching in the current market time so that we can go back and then I can show you the B trade that's inside of this trade. So Anthony knows we used to have C trades, B trades, and A trades. So we'd have 3 trades for every time frame, right? 15-minute, 30-minute, 45, an hour, etc. And I eliminated those trades because what happened was there are different triggers and different things that happen that allow you to make certain trades, and then people got confused on their entry. Okay, so am I waiting on a 15-minute moon or a 10-minute moon? Do I enter on a 3-minute or the 1-minute? And then they just started entering completely backwards, and they were in too fast. Their leverage was wrong. It's hard for them to maintain or keep the concept. This is why it's like you don't want to be talented in 1,000 things, but master of none, right? You want to be the master of one and then know a lot, but you have to master something that gets it done. So that's why we've, from the academy courses that we had, we moved down to the making trading easy, where this is just a very simple, here's the main trade, 45-minute trade. This is what we're expecting to happen. This is what needs to happen for us to make a trade. If this does not happen, then it's going to do the opposite of what we think. So that's the trade that we go into. So if it doesn't produce a long, then we know it's a short. Very
Yep.
simple. So that's what I wanted to put out there and just kind of like walk through. Now, I just want to kind of to cover that, but that's the basis that we want to put through. So basically, so yesterday we spent 3 hours talking. So how do you feel, man, after that, man? Because I seen you were doing pretty, you were kind of getting into some trades. Um,
Got into some today, then got into some this evening. I shouldn't probably be started with.
mhm.
Give it all back again.
Yeah. Well, that's I see like because you do like you'll make a runs, but that's where getting a little more concepts under your belt is going to stop you from going up and down. Right now you're making well, and then you're giving back. But we got to get to where we're
Well,
doing. Go ahead.
it's the main thing of trying to. Well, I mean, right to like today, this evening is trying to guess where the bottom was
Mhm.
from the different support and setting different buy limits,
Mhm.
hoping it's going to turn around, and they just keep going through them. So
Well,
eventually, by the time you get to the third buy limit or something, well, you done lost that much more money. So
yeah, that's what we were talking about yesterday. Like, because we'll do a video on that too. We were talking about the greediest,
right,
right? That's where you should start. Like,
right,
so think about this, right? And I want you to go back and look at your trades and go, okay, if because you know what's going to happen, right? Like I said, in 3 weeks you'll be right. So this is basically what I mean by that, right? So currently, when we're watching these trades in a normal market, which is coming in about 3-4 weeks, you will be right on what you're thinking. But currently, the money or the volume isn't there because retail isn't here yet, right? They're all still recovering from back to school. And
hmm
so it's going down further. So what you have to do is you have to start with the greediest entries, right? So go back and look at the trades and go, okay, that's why earlier this morning, like 5 a.m., I put 211 entries. So first I said 214, 211, because I knew 214 is a normal support that's pretty decent, but 211 was the greediest. So I put a greedy entry and the greediest, right? It hit the greediest. It hit 211.70. But as long as we're
right.
aware of where it's what happened?
Oh no, I said right.
Yeah.
I saw
It,
that.
yeah. So it just allows us to know that we have an entry point at 214, but 211 is the greediest. So what we're looking for is, and that's why I posted on the thing, the cluster, right? So notice how when it got to 211, it created a cluster that it battled itself, right? Like it just fought itself the entire time there. And that's where you see the difference in like what it's going to do, right? So as you're seeing it, you're like, well, it should be going down to 211 because we know what it's supposed to do, right? It works both ways. But when it starts fighting the 212, 213 area, and it starts building resistance before it gets there, then it becomes the thing where we also say, well, okay, we know what it's supposed to do, but if it doesn't do what it's supposed to do, then we know what it will do. And that's
Yep.
where you start getting your long position. And then it's about measuring out, okay, if I'm wrong here at 212.50 and it does go down to 211, how much of that is it a percent? Is it a move? Let me go back into let me go into the trade here and I'll pull this up. So we had, where did we do our cluster? Okay. So you can see this pullback here. When it did get pulled back, and this will be on the YouTube too, it went into a cluster, right? And in that cluster, we can see where's my shape? Should be here, there, rectangle. It went into a cluster. And on that cluster, we can see that it had a level of 211.65 that it hit. Then it bounced
Yep.
up and it went up to 212.30, right? And then we seen a crazy candle that wicked above that, which is 212.55, and then that went all the way back down to 211.60. So once we seen this, we know it's going to 211. We seen that that big dip came down and hit 211.70, right? Now
Yep.
that right there to me is like okay, and then it had that big green candle. That big green candle on the and looking at the 1 minute, that quick green candle lets me know that most people are thinking that this is the support because it reacted in such a big move. So now all I need to do is I need to see this um, come out of this, support or work its way into a kind of like a cluster, which it did. So it went sideways, started building, tried to push, couldn't make it, came back down. And then what I noticed was it got to where, and I'll show you there's a couple differences here where it hit areas that kind of look like this, right? And you can see the difference here where you had an area here a little bit higher that it hit a kind of a cluster at 214. Remember so that was the first area that I marked. And then
Yep.
during that cluster at 214, it went up to 214.76, but then the next couple candles broke below the 214, and then all of a sudden the cluster started becoming lower than that wick, right? So
Right.
once it started getting lower than that wick, right, that lets me
Yeah,
know
you know
that
what's going.
yeah, it lets me know that there's not too many buy orders there. And then you can see how that kind of like fell to another buy order, and we can see that cluster, well, trying to form a cluster. We can see where that kind of like the next one comes along, and all of a sudden we have a new cluster at 213.50. And then it bounces back up and it rejects off of the 214.65. And then all of a sudden it starts to go along the bottom of that next cluster, and then it breaks down again, and then it
Yep.
bounces again, right? So you just take a look at that on the 1 minute, so you can start to see like, okay, what differentiates this from where I can see what's when a breakout is, right? Now, the fact that it's having three clusters and it's battling right there, right? That'll let you know that this is the area, right? And that's why I said 214, 211, is because this is where the fight's going on. Now, if I measure this fight, right? Let's say I know that my target is, this is based off the Fibonacci's. We were sitting around 211.20, and the top of where this spot went, which was 214.78. So if I measure that, that's a 1.70%, right?
Mhm.
Now, if I do a 30x from the top area of the worst entry possible, which is 214.73. If it does pull all the way back to my lower level resistance of the Fibonacci's that we had of the 1120, I'm looking at a 1.7, which means if I did a 30x, right, this would be 30, 45. This would be about 55% of a pullback. Okay, I can't take that risk on a 30x leverage because the minimal I want to do is 30x leverage. So this isn't my area because I want to at least do a 50x. So this wouldn't be an area that I could look at and say, this makes sense for me to try.
Right.
So then I have to go, okay, this is showing me the first sign of a bounce and a resistance, right? Where there's a cluster. Now, what I mean by a cluster is that's why on the 1 minute, I tell you to look at your clusters because clusters are going to be, 5 to 10 minute candles. It's going to be where it's just going up and down, up and down, up and down, up and down, right? It's like a battle, not like one candle to the bottom, one candle up, next candle up, and then all of a sudden a giant up, right? It has to be, a 5 candle kind of like sideways move, right? 5 to 10.
Yep.
That's where we're going to notice what the clusters are. And then we kind of like see how the clusters are they holding support? Oh no, that broke through. Okay, next cluster is 213.50. All right, we're going. Now I can set my thing and go, okay. Because the reality is I could just go from the bottom of what I'm expecting, which is the um, 211, 50, 211.60, 211.70 area. Let's just call it, let's go down and say 211.50. I don't have the Fibonacci's up, but I'll make a full video on this later to get the right number. I'm just going to guess here. So I'm going to say 211.50. I'm going to say I'm doing a 50x, which means if I do 1%, that's a 50% stop loss, right? Now what that means, if I cover this line here and I go across, that just simply means that my entry point, if I do decide to take a risk versus reward entry here, right? And this is when you start doing this and talking it out, you'll start to realize that maybe I'll just wait for a better, moment, right? You start understanding the concepts of what you're trying to like accomplish here. Because remember, you're building a system based on how you perceive it. You know what I mean? Like that's what really is happening, is that like you're coming along and you're like deciding where you should be entering, right? So the 213.69 area, which happened to be, oddly enough, so if you look down, there was a spot where the coin hit a level of 213.25, and then it bounced pretty nicely, and then it started working its way down. And after it started working its way down, it started to create clusters, which is where we get
Right.
excited because that's the reversal that we're looking for. So as it starts to work its way down, we can say, oh, you know what? If I took that last, right, which is normally what most people do, that last wick down, which is 213.25, as a support zone, okay? Majority of retail investors will take that zone because they're not using leverage. They're just buying in as a, kind of like a normal, or most of them use 5%. So if you listen to a lot of people, yeah, people who don't understand leverage or charting at a higher level or have a system or anything like that, they use a simple support system, right? The simple support system would tell you right here that you currently have a support system that is sitting at 213.25. So you can put your order on there and say, okay, I'm good to go. Now you can look at that and go, okay, from 213 down to the next level, which is, and I have to look at the Fibonacci's. I have a level here of 211.55. If it does go down from there to the other level, it's a 0.76, meaning if I had a 50x leverage, this would be about 65%. Still a little higher than I want. So to combat that, if I wanted to take the risk, I would then simply slide down to a 40x leverage compromise between basically a 50 and a 30. And then what this ends up being is a 40, so this ends up being like 55% stop loss. You see what I'm saying? Still a little high for my taste. And if you say, well, you know what, let me just do the 30x here. Now you're sitting here going, okay, 30, 15, now I'm at 45x. Worst case scenario, I have to put my stop loss at 50%, right? So now that you know
Right.
you're putting, $500 at risk of the $1,000 trade, this is where kind of what we were working on the other day, which is where putting in 50% of your trade and then buying the other 50% at the greediest level. Okay, and this is something we'll work on in another video, you and I, but just so you can understand of like what you're going to learn in the future inside your boot camps. So let's say we put 500 at that 213, it come back and it hits it. Then we put the other 250 at the lower level that we're shooting for, 211.53, something like that. Now it pulls back, doesn't hit hits our level, ends up dropping down. We don't get our next limit order 211.53. We're not paying attention. We're at work, and then all of a sudden it goes on that ride. So currently that ride right there, because we knew the trade was coming. We just didn't, that's why we don't have to worry because systematically we know the trade is coming. So if we mark that trade off and we do that trade and we only get 250 or 500 of our 1,000 in, and we're doing a 30x leverage, that trade went 1.87. So we'll say a 1.5% move. So that was a 45 to 50% gain. Now, it's not your full $1,000 trade, but it's 250 bucks,
Right.
right? So that's a winning concept. If it happened to trigger the other 500 sitting at that lower level, well, now you're looking at a little bit different because now you're pulling in somewhere in between those two levels, and you would have been at a level of 2.8. So that would have been a 30. So that's 60% on 1,000. That's a $600 trade. So theoretically, if we did this trade 10 times, like this is a systematic style of trading. If this was a systematic style that you incorporated into your process, you would say, okay, out of these trades, 7 of my winners would be, 3 of them would be 200, or let's just say 4. 4 of them would be the 200s, and then 3 of them would be my 6s. So that's a
Right.
$1,200. You're still at the same $1,200, right? And by
Yep.
being systematic, you're probably going to remove at least one of your losses. See what I'm saying?
Yep.
Or maybe even 2. But this is just worst case scenario. So now we're back to our $1,500 every 2 weeks, right? So take your $700, 56 weeks a year, 40,000. This is the worst case scenario on $1,000 bag, right? Which is really most of the time 500. You're sitting at 40,000.
Right. Yeah, my problem, I know when I do get into like a short or something, I don't get the right prices. So I may be at the bottom of where it's fixing to start pulling back up or whatever. So then I think, well, since it's turned around on me, then I'll close it because it's pulling back up to almost my 30% or whatever. And I said, well, I'm just giving away money, so I'll cancel out and it'll go up there, or it'll go up there and wick it out and turn around and go the other way
That's
because I
kind
don't get to get the beginning of the entry points to where you can stand all the pullbacks and stuff.
right. And that's why see right now you have to become systematic. Because
Right.
right now you're trading on gut. And let me
Yep.
hold up. Where K Torres? Hold on a sec. K Torres! Yo, K Torres, post the trades in the Discord, bro. What are you doing, man? My boy K Torres is on here. He's like, I pulled a 3,100% trade yesterday on Open USDT. I'm like, bro,
Well,
we don't want to hear about it, man.
now let's go share the profits.
You better, right. Send my 10%, bro. but but that's what I'm saying is like, yeah, K Torres, man, get in the Discord and post what you're doing, bro. What are you doing? Give us something to look at. And that's where the let me hit him up real quick so I can yell at him real quick. But that's what I mean. Right now, you're not at the where is he? You're not at the level of like where you're systematically trading. Where are you at, bro? Are you in the new Discord, K Torres? What's your Discord name, man? Are you in the other one? That's probably why I can't. I have to tell you. You got to move to the new one, bro. Everyone needs to come over. I think sometimes you guys are in the wrong. You're in the academy. You're not over on the making trading easy. What's your Discord, bro? But yeah, so right now that's why we're doing like I said, you're getting everything in there. We gotta download it again. Give me 10 minutes. You're such a guy. Oh my god. The you gotta like, we just
Exactly.
want to take you away from where you're like, because you don't want to trade then close, because you're paying prices to enter and close, right? If you pay $10
Yes.
to get in, you want to at least make $10 on profit before you get out. You
Yeah.
want to at least break even on that. But now this system here, can you see that now here you can, when you set your entries, you're going for the greed entry and then the greediest, right?
Right.
So that way, what'll happen is, as the market moves on, is that once the volume starts coming, right? Because you'll notice that if you do the 10 trades and you're like, oh, my greedy trade hit 7 times, but my greediest trade only hit once, right? So let's say right now we start doing the greed and the greediest trade, right? And we're
Hmm.
doing five, let's say we end up doing four greediest entries and three greed entries, right? Or so it would be like this. So the how many times something hits. So the greed entry is the taller entry, which is the most likely, hits 7 times, but the greediest hits five. And we're like, okay, the greediest is hitting 5 times. We know where the market is. And then the next time we're hitting all our greed entries, but then we go down from 7 greediest down to 5 greediest. Well, now we know that the market is starting to have more volume. And eventually our greediest get down to, instead of four, it's only two. Now we know that we need to now start being more aggressive on our greedy entry. Instead of 500, we start doing 700 and 300 on the greediest. See what I'm saying?
Yeah.
So that way we're getting more money in. Instead of 500 a trade, we're doing 700, but we still have 300 on the greediest just in case there's a wick.
Right.
But once we start noticing that those particular trades are no longer happening, we just start changing the value. Instead of 500 and 500, we do 703 and then 802. But we keep the same system, we just change the values of the entries. See what I'm saying?
Yep.
So that's where I want you to be. I want you to like get to your entry, and whatever you decide is a low, right? And go back and look at this video, because I put the clusters in there where you can kind of see the difference, and then just evaluate the clusters. Okay, well, here's the last drop at 213.25. If it comes back to that, does that make sense for me to do a 30? All right, so if I put half here and then do the other half on the lower side of 11 to 1160, right? At least I'm in, but if it does drop all the way down, that'll cut my entry in half because I'm actually lower, right? Or go, okay,
Right.
213 makes sense, but I don't want to play that much risk. So I'm going to go down and say, okay, based on where I think it's going of 213.50, I'm going to go up a 0.5% because I'm going to do a 50x leverage. And I just, I don't want to be in a situation where, I'm worried about my stop loss there. So I'm going to do this and I'm going to say, okay, I'm doing a 50x. I'm going to go at this level. And that way my stop loss gives me a little more room to go down, or separate it and say, okay, if I'm doing a 30x, I'm going to go up 50 where my stop loss is 35% because I'm not willing to lose more than that. And I'm going to set my entry at 0.5% up from where I believe the greediest entry is at 212.60. I'm going to do a 30x leverage, which means that if it does pull down an entire like percent from that area where you enter to where you're going is only a 0.5%, which means that the stop loss is only really 15% to your lowest level, but you're also giving yourself an extra 0.5% for your miscalculations. You see what I'm saying?
Right.
So there you have two things, right? So if you do a 30x and you calculate from your lowest position a 0.5% up, which would be 212.60, that means if it does hit the lowest predicted level that we think is going to happen, which is the area of 11 to 1150, right? At that point, what you're doing is you're saying, okay, from this lowest level, I'm going to move a 0.5% at a 30x, meaning my stop loss can be at a 30% level, right? 35% and or 30% level, but from where I'm entering, it's only a 0.5% down, which means it's only half of my 30x. So that's 15% stop loss. So where it's supposed to hit is going to end up only being a 15% stop loss, right? So if we go in there, hold on one second, let me get this. So if we go in there, now we're working with the knowing that we have a 15% loss or stop loss set up on the entry point level. And then the complete 30% would actually be a whole nother level down. And we can look at that and go, I mean, if it actually goes that far down, which I don't think it's going to, I mean, that would be like a complete, there's no support, there's no lines there, there's nothing there. But so I'm pretty safe here if I enter a 212.60 at a 30x leverage because it's only a 15% stop loss to my real entry, and a 30% stop loss gives me an entire, like, if there was a crazy wick that happens, I'm probably going to survive it. So
Right.
you're still willing to give up 300 of the 1,000, but you've given yourself a huge area to be wrong. See what I'm saying?
Yep.
And you can do the same thing. You can put 500 on the 212 and then put 500 on the 15% stop loss, right? That way, if it does, pull off and it, makes that move down, you end up picking up the difference between those two levels, which would be something like an average entry from 212.60 to 212.02, right? In any of those scenarios, like, taking a look here, and I'll just map this out. On the scenario of the 212.60, that's going to pull a 1.7, like I said, we're doing a 30x, so that's 40, 30, 45% gains. There's 450. If it slides down to the other area, now you're at 2% gains on 750. It's not the full 1,000, even though you're in for 1,000 because your one entry is higher than the other. So now you're looking at 60% on 700, right? So you're looking at $400 in gains.
Right.
And that's the middle zone, right? That would be if it went all the way, actually, if it went all the way down, would be 2.34. So 30, 60, 60, so 70, about 75% on 700, right? So 350, 450. So that's a $450 gain right there, right? So that's where we're getting 50% of our $1,000 bag. And we had tons of opportunity for big wicks, big moves, all these things that happen to us. And we're pretty much eliminating a lot of that risk because we've already gone to the greed and the greediest entry, which means most of the time when you do that, that is where the wicks are already gone. Does that make sense?
Right. Yep.
So that's the trade I'm going to put up so the students, we can all follow the same thing, post it, get it in there, move forward, and build from there. So guys, if you're on TikTok and you want to hop into anything, check out the bio. You can come over to the Discord. We're over here in Discord, kind of like sharing all that, but we can look at the comments in the videos. Go watch some videos. Don't forget to like, share, and comment in the video so they know the algorithm knows to put you in there. I'm gonna hop off now. But so start taking this into effect, brother. Start using this as your process. And then I'm gonna make a video on this today and then put it inside the Discord so that we have this as a main trade for everybody. So this is how we were gonna focus on, isolating one particular master trade. And then from here, I'll show you how we can go different directions off this one trade so we can evolve into other opportunities. So how do you feel about that? That makes sense for you?
Yeah. No, it does.
Yeah, I mean, so
I
when
just,
that's what I mean. When you make it systematic, it's like, oh, okay, no worries.
right.
I'm just doing what
So
I do.
what time frames are you actually looking at support? So like the 1 hour, the 4 hour, the daily
Yeah,
to
so
get your. I mean,
yeah, so I mean, for me, let's say if you're looking at, and let me throw uh, the areas here. So a lot of times, when you're seeing all these things come back and down, I'm normally doing a pretty short version of the trade, or so basically something that would be like 2 days old, right? So I use the 1 minute, and I can see where the 1 minute had a level of 210.82, and then the higher peak of that where it had more support was 211.85, right? So for me, and this will be on the video, you can see that my level of entry would have been something like 211.92, right? Um,
right.
so that's a very simple like process because I can see that that's basically where we were last time, right? Now,
Right.
don't forget that we're also like we're tracking a particular trade, right? So go back to what we're really doing is we're tracking and let's take a look at Solana, right? So Solana, if we did the same philosophy, which is the 45-minute trade, right? So let's take the 45-minute trade. We'll go back to Solana. What's our goal? So what makes our master trade on the 45-minute, right? The
The
master
one
trade, yeah, the 1 hour breaking above positive, right? Retesting,
coming.
and that's our entry,
Yeah.
right? So if we actually followed that on Solana, we would have been entering at 205.69, right? That's where we seen that volume. We'd have took that up to 217. Then we see
Yeah.
the orange start to like at that point we know that's wave one. Then what happens? Wave two pullback, and then 1 hour retest again and starts to head up, and we get that second move to the top. You see?
That's not. Um. That's not wave three right there. Your first arrow, because it looks like the
Well, you
where you
have
got
yeah,
the.
you have two different like so. I know what you're talking about because you see this little red here, right?
Yes.
But there
Well,
there's
to the
there's
left.
no
To the left of you.
yeah, yeah,
To
yeah.
the left. That looks like the wave one, then the red pullback, and then wave three, then the wave four, then wave five.
Let me get all these out of here real quick. Okay. So here you can see where it decided that
Because
this lower level was wave one, this is wave two,
yes,
right? And this is your big wave three,
right.
right?
That's. I mean, that's the way I interpret it.
Yeah, 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 yeah. And that's why when we take it in the way that like so Elliott waves and these Elliott the waves don't exist until the move is done,
Right.
right? So that's why for us you could see this move here, and if you're paying attention, right, that's what I'm saying. Like, if, as you go on and learn, basically you need to work backwards, right? As you go on and you learn the rest of kind of like what we're teaching here, right? As you move forward, you're going to realize that you're going to be able to start to see these earlier waves here, right? And take advantage of these bigger moves. But
Right. And I'm
yeah,
seeing.
to have a safety, right? So let's go back to safety. Okay.
Right.
This first move, when the moon breaks above, right? This area here, that is wave one, right?
Yep.
The retest is what we were looking for. This is our entry. That's exactly what we were talking about
Okay.
the other day. And then this yellow,
Right.
that's our entry. This is our area right here. So this is where we would be entering, which is end up being wave three, right? Now, what
Right.
happens here is that we end up getting the 1 hour pulling back again. It stays positive, which gives us another move up right here, which is basically, and this one ends up being wave five.
Right. Yeah. Yeah. Yeah.
See what I'm saying?
Yes.
But for us, when we're doing the
The safest
simple,
way is to.
yeah, the simple rule, right? And this is a rule that's like, it's protecting you from getting in early. Because I mean, think about the last 2 weeks, how many wave ones we've seen, and then wave 2 just
Oh,
completely just goes to shit.
yeah. I know. I felt every one of them.
Hold on a second.
Because I forgot
Reply.
to take profits, or I put a buy order in halfway where I thought it was going to hit. But wave one or then two will get you for sure.
Yeah, yeah.
Not being for it. Yeah.
So go to that site there. So anybody looking for the Discord, I just posted it. I'll post it in the chat for you guys. Give me 1 second. Everything is vccryptonation.com will get you where you need to go. All right. So, and you can see now that we're going, now if you've seen again, there was another entry here, right?
Hmm.
Where the 1 hour starts to move. But see, that's why I was showing like we haven't had where the blue pulled down or the moon, but you see how the orange starts to move here? That puts us at another entry point here, which was that pullback we just saw at 215.65. That's why if you were watching, you seen I entered that trade, see?
Yes.
And I'm up 27%, right? But these are what
Yep.
we call C trades, right? And the reason why it's a C trade is because we've already got the most juice out of it. There's only so much money in a trade. So there's the big money, the pullback, the FOMO, the pullback, and now we're in what's called discovery, right? Discovery, we never know what's going to happen. But what I'm going on here is I've been looking at the daily, right?
Yeah.
And I can see the daily is starting to build momentum. So that's why I keep telling you guys, give this another week or so. We're gonna see like 250 out of Solana, right? Maybe even 300.
Right.
But for you, you just staying focused on the systematic style of where you are putting your entries on the greedy and the greediest, and then mapping out, okay, if I did 30x leverage, does that hit my stop loss at 15%, right? Because you want your stop loss to be at a 15% to your greediest level. And then you have an additional 15% of safety, meaning that if you miscalculated or something goes wrong, you still have that extra section that's protecting you an extra 15%, right? From anything that,
Right.
a mistake, right? And that's kind of where that starts to be the smart way to kind of like measure things out, because then you start talking yourself out of bad trades, right? And
Right.
then you have that extra 15%, which is the other half of your trade. And the only thing you really need to do here is this is how you start to find the market, right? So when the 15% pullback stops happening, and it instead of being 3 out of 7, it becomes 2, and then 1, then just increase the original bag on the original entry from 500 to 750, because this lower
Right.
level is no longer, the greediest is no longer an option all the time, because the market is actually holding stronger than it was before. That's how we know how to invest more at certain levels. But we're not changing anything that we're doing. We're just changing the amounts at certain entries, and we're changing the leverages. So to even increase that, you don't even have to let's say that we do this, right? Just food of thought. I'm gonna give away some free juice here just because. So let's say on this original entry we're rocking that 30%, right? We know that 15% would be here. So what happens if I say, you know what, I'm gonna go 40%, which gives me another 10%, and I simply change this stop loss, meaning that now I know that this area is going to be, instead of 15%, it's going to be 20% stop loss, right? So if it hits there, I went back 20, and this one here, that's where the difference is, because this one becomes a 45%. So now you're in a position where this has to be moved up, because this would be less. So this would have to be something like, you don't get as much leeway if you're wrong. But if the market is showing you that there's more money and more volume, you're probably not going to be wrong. And then if you don't get that second $500 entry and you only get the first one, it's okay, because it's not 30% anymore, it's 40. So now, just to give you an example of what I mean, let's say that first entry hits, right? And it jumps up and it does, its move of 2% or whatever, right? That 2% would normally be 60%, right? So then what happens is um, you've got 60% of the 500, half of your 1,000, right? So in reality, you have 300 bucks. But if you're doing a 40x, well, now you're at 400. See what I'm saying? So you
Yes.
made that extra 100 up, right? Because even if we did 30x and we went down here and we had a 2 at that, what that basically means is when you have 750, right, you would have basically $450 in profit. So you make the same amount of profit without increasing the $500 to 750 by simply going from 30 to 40. See what I'm saying?
Yes.
But that's a whole nother lesson. That's
Yeah,
something. So
it's not just
you're in the
it's
you're like for you. That's what I'm saying. Like on TikTok and everybody, most people aren't in the master class like you are. So I don't like to
right.
talk and give information on because in order to take the master class, you got to sit down and you got to be a certain type of trader that I know that will understand what I'm saying. Right? Somebody new right now listening to this is like they shouldn't even try this because it doesn't even it's way beyond what they can't they need to just learn to drive the car first. So a lot of times we want to keep most of the things basic so that everything's simple. Because once you
Yeah.
start changing leverages, percent, it's like it becomes so many working parts that people get confused and like, oh, it's too hard, right? Instead of just going, okay, here's the greediest entry, put your $1,000, do 30, 30. If it hits, it hits. If it doesn't, who cares?
Right.
Right? So let's take it to the other side. Let's take it to a guy who doesn't trade, a newbie, just so that they have this information as well. So if you're a newbie and you're in Making Trading Easy, the basic is this. We're going to map out a 45-minute trade video for you. There's going to be a greedy entry and there's going to be a greediest entry. Your entire job is to simply place your order on the greediest entry. And if it hits, great. If it doesn't, it's okay. And then when those greediest entries become where they're less and less, then you are simply going to move up. So if you make 5 trades in a row and the greediest entry hits once, then what you need to do is now we're going to move up to the greedy entry so that we get more entries because the market is showing more value, right? But if the
Right.
greediest entry is hitting 4 out of 5 times, then we're exactly where we need to be.
Yeah.
It's that
Yeah, I
simple.
understand that.
Yeah. And that's what they should be doing when they're in the basic trading is just take the greediest, set a 20, 25 or 20% stop loss because you don't need to lose 30% on the greediest entry because you're already in the greediest entry. So your stop loss
Right.
goes down to 20, which saves you money, and your take profit is 30, which is very simple. And you should be doing, 200 to, $400 trade. And 7 out of 10 is your wins. Your wins are worth
Right.
30, right? So let's say you're doing 200 bucks. So your wins are 60 bucks. You win 70 of those, that's 420, right? You lose 3 of the 20%, right? So what's so 200 20%, 40 bucks. So 40 bucks times 3 is 120. 60 bucks times 7 minus 120. So you have a $200 trade. At the end of your session, you have $300 to $400 in profits. So you're doubling your bag every 10 trades, which is all you need to do because you have to master
You
that.
make yes, no, I do need to master that. That's what I'm hoping to get
Yeah, yeah,
started.
yeah, yeah, yeah. But the problem is that you're catching on, and the market is just not where it needs to be for you to see the results that you could see. So what you have to do
Right.
is you need to. That's why we have boot camps and master courses because it's not that you're wrong. You're catching on to everything because I see what you're posting. You hit. You just don't take profits a lot, and you're like, oh,
Right.
I thought it would do more, right? You're out thinking yourself.
Yeah.
But now that you can get into these greedy, now you're not where you're losing is that you think it's going to head support, and you're right, but this market doesn't hold and it drops one more level. And then you get in again, and then you're like, you know what, this doesn't look good. And then you get out, and then it runs, and then you get in, and then it drops all the way back.
Yes.
And you're like, what
Yep.
the damn it? It's not holding the way it's supposed to, and that's why you're getting confused, right? That's why
Right.
just simply just adjusting to say, okay, let's go greedy and greediest, and then we'll play it from there. Yeah, it's just
And if you don't
yeah, you
hit your
just
mark, you don't. It is what it is.
yeah, you just need to have systematic. You need a system so that you're not
Yes.
like guessing. You're in the greed and the greediest, and that's the way it is, and that's all.
Yep.
And it does what it does. And if you're in, you're in. If it's a 30, if it's a 20% stop loss, it is. If it's a 30% stop loss, it is. But I'm in.
Oh yeah. I'll
Yeah,
be good to see this 45-minute fine tune for everybody.
yeah, and that's how we roll. That's how we do. But that's the only problem on you is just you don't you're not you don't have a system, so you do 4 or 5 extra trades a day that you shouldn't, and that's where you take a beating, and then you make a good trade, and you're like, I knew it was going to do it, and then you make back what you lost.
Well, that
It's
don't happen
funny,
too
but
often,
it's kind of like that's where
but I
everybody's
do.
at.
I do make back what I lose sometimes, but it's a bad. I mean, yeah, you learn so much more when you're deep in debt,
Yeah, yeah,
in the
yeah.
minus. You get to come back. You get to learn, watch the candles even more.
Yeah, I mean, you're on it. You're on it. You just need to implement the system. So that's why I'll break down this 45 minute now that we've seen the results on both ends, and then
Mhm.
we'll put it back out there. And that's why the cluster videos that I did earlier are important because the cluster videos explain where to start seeing things are going to make a decision, and then deciding from that cluster how far you should go down, what's the next greedy entry, and what's the greediest, and then measure out the greed to the greediest and see if it's a percentile that's worth the risk, or just say, that's way too much. I'm going to stick with the greediest. And if it doesn't hit it, then I'll just wait for the next cycle.
Right.
Okay. So I'll make that video, brother. But other than that, how you feel, man? You feel like you got a lot of information in the last 2 days?
Oh yeah, definitely for sure. It's helped. It's helped a lot.
Yeah. So we'll move to that. I'll make that video tonight, and we'll get all that put through. Just gonna grab lunch and dinner and stuff like that. And but yeah, I just wanted that. I wanted Litecoin to finish, and then we apply the same system to Solana, and you've seen what that did. So coins that
Yeah.
actually do well.
Yeah, I don't play Litecoin. I just happen to. I've been since I found that 45-minute video. I've been thumbing through different coins just to find the buy signal, then the green moon,
Where did you
and
find
try
it?
it.
So where were you at? The other disc? Were you in our academy?
Oh, in this
Okay.
free chat, but it's back about a year ago,
Oh yeah,
probably
yeah, yeah.
around
Yeah.
maybe Gus was new then
That's
still.
Gus. Yeah, that's Gus. Gus is
Yeah,
from the
and
academy. So Gus every once in a while when Gus is talking, he talking academy talk, and he said, hey bro, I know we're in this new making trading easy. Don't be mad at me if I'm talking about too much. And I'm like, nah, bro. It's like, yeah, the whole point of making trading easy was that it's the way to adapt to all the other things out there. Because the one thing I learned over the last 5 years and definitely the last 3 years with the academy was that everyone then goes out and learns other things and then tries to do it. What we want to do here is give you a systematic structural trade that you can then apply all these other things you learn to give you more confidence or more information that the system trade is correct.
right.
Yeah, because what I learned is even if I gave everyone a simple, here's a moon, here's an entry, there you go, they still went and was like, well, here's the support. Oh, here's Elliott waves. I was looking at the algo boxes, and they would bring me 1,000 different indicators, and I'd be like, yeah,
Well,
well, it all worked,
I
but
know
yeah,
I was bad when first getting the moons and stuff about jumping ahead. If I was on the 1 minute, oh yeah, it's going up. I'll jump to the 2 minute real quick. If it looks like it's
yeah,
fitting to hit the 2 minute, I'm gonna get in the trade, get in early.
yeah,
Well, by the time it gets to the top of the 2 minute to turn, it turns around on you,
yeah,
or to the 3 minute, it turns around.
yeah. That's what I
But
say.
yeah, or I push it when I get the green moon. I push it, then don't wait long enough, and it'll take it back away from you. Yeah,
Yeah,
it's.
yeah,
I mean, stuff you learn, you watch.
Yeah.
And like you just pointed out how to watch the volume come back and retest above the zero is it makes sense. I mean, you can see it on the chart, it makes sense.
Well, you need
I was
moving for
always
something to
thinking
go up.
I was
You know?
thinking you always wanted to be down here below the red line
Yeah,
for
you're
the
right.
best in
That's the thing. You're right. You want to be, but right now, that's why the book. I should have just. So the thing is this, right? And all the guys from the academy know the the system that we have is called volume is king, and I never share that with anybody because it's an academy. It is the basis and the philosophy behind everything we do. The reality is this:
right.
if there's no volume, it won't work anyways, and if there's negative volume, it's down. You're correct. If buying the bottom, and this is why everyone gets crazy because the secret to trading is buying the bottom and selling the tops. And sometimes you watch a bottom come and then it comes more and then you're in and it comes more and you're like, what the hell's that end of the bottom? Right? That's why volume dictates everything. That's why you guys hear me say volume is king. So anybody at the academy, they'll always say, yeah, VC says volume is king. That's because what they learned was they took all the ways that they trade, and the only thing that mattered was to just take my one course on volume is king, and then while they're waiting for all their whatever system they're currently using, they knew that all they had to do was see the volume, right? And then they made the decision. Doesn't matter what everything else said. The volume is king. It rules every indicator. That's why we have our moon indicators. So once you have that in there, then you just move from there. So what I'm doing now, instead of having to deal with 1,000 different types of trades, I'm just going to making trading easy, which is one master trade, one thing. Once that's why you hear me saying now, if it's supposed to do something, when it doesn't do what we expect it to do, then we know what it will do.
Right.
It's that simple.
And there ain't too many directions it can go. So
Right. It's up or down.
yeah, it's a 50-50 chance the first time.
All you got to do is get in on the real bottoms and sell in the profit zones and then have a system that allows you to do that consistently while making
Right.
profits and compounding profits into a nice size gain so that you can go from 30 or 40 a year to 80 to 120 and be like, okay, this is yeah, I'm not doing anything special. I'm just pushing the wheel.
Right. And that's what I want to get at.
No, that's
For
it.
sure.
So you're getting there, bro. Yeah, yeah. Let me make this videos tonight, and then we'll get everything, and then tomorrow will we happen on the same time?
Yeah, that's fun.
All right, man. Perfect. Give me
All right,
one
man.
second here.
Yeah. You got my text last night, right?
Yeah, yeah. I did. Where is? Oh. All right, yeah. Let me hop off this. We'll rock and roll, and I'll make that video tonight. We'll get it up tomorrow. Same time tomorrow. We should do 5 o'clock Central. We'll hop back on. All right, TikTok. Good luck. God bless. I gotta hop off out here. Gotta run, and then we gotta make some videos, and I got some things to do. I gotta eat. But I appreciate you guys. 5 p.m. Central. We'll hop back on.